Ethereum versus Bitcoin, which will be the future currency? Bitcoin has a first-mover advantage and is known as the face of cryptocurrency. For many years, cryptocurrency lacked a serious competitor to compete with Bitcoin. In 2013, Bitcoin accounted for roughly 90% of the crypto market value, but competition is heating up now. It all started when Vitalik Buterin, a 20-year-old Russian-Canadian, won a $100,000 Thiel Fellowship grant. As a result, he dropped out of college and founded a DAAP, a platform that allows app development on the blockchain. This platform is now known as Ethereum. Ethereum rose to prominence as a serious competitor, capturing a significant portion of the cryptocurrency market share in 5 years. So for today, we have concluded down the comparison between Ethereum and Bitcoin. We have also tried to answer the most asked question: which will be the future currency? So without further ado, let's get into it. 3 main differences between Bitcoin and Ethereum. Make sure that Bitcoin and Ethereum are not the same thing. Ethereum was not designed to compete with Bitcoin. Rather, it was intended to be a DeFi platform. Almost by chance, the popularity of its platform propelled Ethereum's coin, Ether, to become the world's second largest cryptocurrency. Here are 3 key differences between the two coins. Currency versus platform. Bitcoin has proven to be a credible alternative to traditional fiat currencies. As a result, Bitcoin is a pure cryptocurrency that primarily serves as a medium of exchange and a store of value. Ethereum, on the other hand, is designed as a platform for running programmatic contracts and applications using its own currency. Ether is a blockchain platform that functions similarly to the Apple Store or the Android App Store. Bitcoin is a commodity, similar to gold, or a store of value, said Pat LaVecchia, CEO of Oasis Pro Markets. Security versus speed. In 2 key metrics, Bitcoin continues to lag far behind Ethereum. So, what's the deal with Bitcoin's sluggishness? Bitcoin's first priority is security, and it is secure due to its coding language. Bitcoin is programmed in C++ and is limited to only 70 commands. This limitation makes hacking the blockchain within these set commands more difficult. Ethereum is a platform that is still figuring out who it is. For example, Ethereum 2.0 will have entirely different rule sets. Finite supply versus infinite supply. Bitcoin has a limited supply of 21 million coins. When the supply is depleted, that's the end of it. As a result, investors view Bitcoin as a store of value and an investment against inflation. In contrast to Bitcoin, Ethereum provides an infinite number of Ether but limits the amount released each year to 18 million. The situation for Ether. Some investors like Ethereum because its platform is constantly evolving to meet the needs of the market. When you buy Ether, you are betting on the future of the blockchain platform. Investors often look at Ethereum as a growth-type investment, making a bet on the continued development of the decentralized ecosystem built on Ethereum, said Phil Bonello, Director of Research at Grayscale Investments. Have you heard of non-fungible tokens, NFTs? You of course have. Beeple sold his NFT art, titled Every Days, the first 5,000 days, for a staggering $69 million at auction. And where was the NFT held? Yes, you guessed it. The blockchain that hosts NFTs like Beeple's arts is Ethereum. Furthermore, the record-breaking NFT artwork was paid in Ether. NFT is just one example of Ethereum's limitless potential. It enables users to trade assets, borrow and lend money, and trade assets directly with one another without the involvement of banks. Instead of miners with the highest computer power having the greatest advantage in successfully producing new coins, individuals with the largest ownership interests are now awarded that right. Ethereum has been modified to mint fresh Ether through a mechanism known as proof of stake, POS, says Daniel Polotsky, CEO and creator of CoinFlip, a renowned Bitcoin ATM operator. To become a validator on the network, users must put up collateral, or a stake, in the form of Ether using POS. Because there are fewer Ether in circulation, the more Ether that is staked, the higher the value, Polotsky explains. Furthermore, proof of stake eliminates mining costs such as electricity and hardware expenditures, implying that miners will sell fewer Ether. Instead, these Ether will be staked, increasing the value even further, Polotsky explains. The rise of decentralized finance, or DeFi, is another tremendously positive trigger for Ethereum. The idea is that traditional financial intermediaries such as brokerages and exchanges are eliminated. This idea has gained new mainstream relevance in recent weeks as some brokerages, such as Robinhood, have prohibited investors from purchasing stocks such as GameStop, GME, and AMC Entertainment, AMC, among others. When people compare Bitcoin and Ethereum, it's a bit like comparing gold and electricity, said Alex Adelman, CEO of Lolly. They are both valuable, but they serve very different functions. Ethereum is a type of infrastructure. It is a blockchain that is still in its early stages but has the potential to transform finance and technology. The situation for Bitcoin. Bitcoin is the undisputed leader in the crypto asset market. When people think of cryptocurrency, Bitcoin is often the first thing that comes to mind. This type of brand recognition is nearly impossible to overcome. Bitcoin is held on the balance sheets of major corporations such as Tesla, Square, and MicroStrategy. More liquidity and price stability can be provided by institutional support. According to Blockworks co-founder Jason Yanowitz, Bitcoin has a significant advantage as the standard currency. And he emphasizes that there is no guarantee that Ethereum will maintain its lead in DeFi platforms. Today, Ethereum powers the majority of DeFi, decentralized finance, platforms. But thanks to Layer 2 solutions, we will be able to build DeFi platforms on top of Bitcoin in the near future. Bitcoin will eventually become the world's monetary settlement layer as well as the global standard of value. The main disadvantage of Ether is that its currency is dependent on how successful Ethereum becomes. Ether's value may fall if the platform becomes unpopular. The key advantage that Bitcoin has over Ethereum is that there will only ever be 21 million Bitcoin. This known restriction to world production is one of the primary reasons why some investors regard the cryptocurrency as equivalent to digital gold. However, unlike gold, newly discovered reserves are not conceivable, and over 90% of Bitcoin, or 18.7 million, has already been mined. Should you invest in Bitcoin or Ethereum? When it comes down to it, the ultimate debate between Bitcoin and Ethereum as investments is one of risk tolerance. Both are expected to perform well in the long run as the world becomes more digital and cryptocurrencies' acceptance grows. Although Bitcoin is the more mainstream and stable of the two, the bullish sentiment among industry experts appears to have only grown in the last year for Ethereum. As with most investments, it's possible that Ethereum's higher risk comes with the possibility of higher rewards. In any case, it's no longer 2009. Both currencies have sped past the proof of concept stage, and it's now time for investors who haven't previously considered this asset class to take both Bitcoin and Ether seriously. So overall, they both have got the potential. And it also depends on your interest. If you have faith in the Ethereum network, then Ether might be a good choice for you. On the other hand, if you want to see the market dominance and its volatility, then Bitcoin might be best for you. But make sure to do your own research or have a financial consultant with an expert before investing. Stay tuned to our channel for the ultimate guide on cryptocurrencies.